Welcome back to J-WIC FX online tutorial. It's been quite a long time. So today, quickly, we're going to go into inducement and liquidity. Inducement and liquidity. There's a rule I simply keep for myself. If you can't spot liquidity on the market, you are probably likely to be the one who will be liquidated. You might be the liquidity there. So you need to be able to spot liquidity in the markets to flow with large institutions, so don't take your money. You might not be 100% correct most of the time, but at least you will have a high probability of profitability. So now, what is liquidity and what is inducement? Liquidity, simply just put everything simple. Liquidity is simply where there is a lot of orders resting on the market, a lot of money sitting on the market. Okay, so where you see people placing orders, either they want to buy, either they want to sell. A lot of retail traders using their support and resistance want to sell or buy at those points. A lot of retail traders or traders want to use their trend line, buy and sell so some certain points, and all of that. There is a lot of resting orders sitting down on those places, a lot of money staked in those places. That is simply how liquidity is. So I would simply put it, liquidity is what fuels the market. What fuels the market? All right, now, because large institutions, for them to be able to flow in their direction, they will need an opposite direction, or however, they will need large volumes of money, large volumes of orders. They take those volumes in order to be able to propagate in their direction. We're going to do this on chart. I'll simplify it here. Why inducement is the how. How do these large institutions do this? They simply will make a tricky pattern for retail traders to usually come into that place and put those orders. So once these retail traders get to those places, they form liquidity and they either grab or sweep that liquidity and go their direction. Let's go to the chart. So I'll just explain it quickly. Now, so where are you going to spot how are you going to easily spot liquidity? I'll just give you a few tips. Double tops. These are patterns people usually trade. I'm not saying you should go and change your trading strategy, or whatever strategy you use in the market that makes you money, that makes you profitable, is fine. But for SMC traders, liquidity is one thing we also try to check for to make us have a very good strategy, high probability of us making out on our trade. Okay, so liquidity should be one of your confluences you should always put. Liquidity should be one of your confluences you should always put. Okay, equal highs or equal lows, double top, double bottom, even trend lines, Yes, people trade trend line is good as far as they make their money, but I'm just showing you how you can easily spot this enough liquidity. Okay, now as the market is moving, this is an uptrend. Obviously, I've made videos on how to spot trends, direction of the market, right? What we call structural directional bias or whatever. However, these are obviously an uptrend, right? Breaking structures to the upside. Now, as the market is moving, it is creating liquidity. It is going towards where there is liquidity, and process of going towards where there is liquidity, it is also creating liquidity. You will be seeing this pattern in the market continuously. Okay, now this market is breaking structure and going up. You can notice this trend line that's forming here. This also sits as liquidity. This sits equal highs or equal lows. This sits as liquidity. So let me break it. Let me do some breakdowns. We'll spot this on the market later. Now, okay, for those trading what I call it support and resistance, obviously this will be like a resistance, right? Breakout and retest, those trading those things and all of that, or supply zones and demand zone. However, now what some people will want to do here is to sell here, which can play out or might not play out depending on how they know their strategies well. Okay, there's an order here. Now some people, when the market gets here, some people might execute directly, or some people might have already set pending orders. Now this will be, if the market is down here, let's say the market is down here, you need a retest to this point to sell. That will now be a sell limit. I get it. Good. So there is an order here, there's a sell order here, sell limit order, there's a stop loss here. All these orders, a lot of retail traders are setting these orders in this place. Are you getting it? So when the market eventually comes here, let's say we're using a sell at that point in time, and the market eventually comes into that place, what do we see there? Now watch this. The market might do different things. Okay, come here, activate your trading and take or grab liquidity or sweep it, however, before it will now want to go towards its direction. It can happen like that. It's what we call liquidity sweep. All right, now which means the market has come to take a lot of retail traders' money at that point in time before it went to that direction. You need to spot liquidity so you not be liquidated. Now let's take the other scenario. Let's say we have a buy stop. So there are lots of orders here. Some people will be like, okay, if the market should break above this high, what do? We are going to buy, right? As simple as that. Yes, if you remember our ranging structure, we use something like this. Okay, that's box model strategy we're using. So the market now using a buy stop, market break above, what you want now is a retest. So it will continue to wherever your take profit is. That's your anticipation. But sometimes the market might come, take liquidity before going to where you want to go to. So different scenarios, even on trend lines and all of that. Sometimes you might see something like this, that the market will just take liquidity before it will now start going up again. All right, a lot of them happen that way. So liquidity is just exactly where there is a lot of money sitting, then the market is always pursuing that money. It's always going for it, and as it's going for it, it's also creating patterns of liquidity. Right now, was inducement. Oh, by the way, there are different types of there's what we call buy side liquidity, sell side liquidity. You don't need to start you might want to go and watch other videos or do other lessons for that, but that's not really required here. Just learn the patterns of liquidity: equal highs, equal lows, trend line patterns, and other things, right? Okay, so now let's check, let's enter inducement. So inducement, as I said, is the how did they do this? Okay, how did they make this pattern? So usually how you can spot inducement is quite simple. Just after an impulse move, after a very strong momentum, the first small pullback you are going to see there is the inducement. Okay, let's see one on uptrend. The first small pullback you are going to see there is the inducement. All right, now let's say this is where we have our first impulse move. Let me draw an accumulation. If you watch our range structures, I've explained accumulation and all of that. So go to our previous videos and see all of that. So obviously there will now be an order block here, right? I told you how to spot order block easily. So look at this impulse move here to the upside. Now there's a little pullback. That is where your inducement comes in. All right, so it's like a trick the market sets to catch the attention of retail traders. So when you see this, your mindset will be, oh, I have this support here I want to take. All right, and you obviously want to buy from here and set your TP here, okay, and stop loss below here. Now there are lots of orders there. The buy what do you call it, the buy limit now, in case the person is setting a penny order, waiting for the market to come to this place and buy and keep on buying. All right, now all those who execute and have set their stop loss here, that's when the market is currently at this point in time. What will happen? This is a trick. This is not the exact place the market actually wants to work with. So it forms this pool of orders which you can now call liquidity here. All right, what will happen? Market will come here, take those orders, activate them, take the stop loss. They've taken large amount of what volume, so they can propagate to their direction, get into the normal order block they want to use, and boom, to their direction again. So just keep inducements as the how, liquidity as what first market. Now let's go to the charts briefly and do some interesting things. So I'm on BTC chart here, all right, on the 4 hours. Now the last break of structure to the upside was this, and it happened that the market took the current load at that point in time, and as it took it, obviously to change, it will now be a change of character to the downside. So the market is now bearish on BTC. All right, so after the market has come down bearish, it made this pullback. Now as it's making this pullback, you can notice this trend line patterns forming. All of this, these are liquidities. Okay, when market got to this point, it bought, got to this point, it bought. Now retail traders mind will be like, oh, this trend line is forming here, let's set our stop loss below here and buy to so points, maybe here for those doing 1 to 3, but wherever, however. And it played out. Now that is like a bait. That is what the market is actually now trying to drag retail traders to. So the next person now be like, oh, since this trend line worked, let's go into the next one. For smart money concept, you would have already seen that, oh, what the directional bias first of all? We're on a bearish run. Very good. So you've reduced your your probability of going wrong, right? Now, so your mind will now tell you that this trend line pattern is probably liquidity that the market want to take. So the market, what you're now waiting for is a change of structure to the downside, which happened there. Change of structure right to the downside, and taking those liquidity, then reverse to maybe an order block. You can see this accumulation here. Let's be real here. You can see this accumulation here now, and you were waiting. Obviously the market didn't come to this place. It's not your fault. The market will always do whatever it wants to do. You are just analyzing, right? It didn't come there to initiate your order, right? you've left that side. Now after this impulse move, where is the inducement? After this impulse move here, there's a little pullback here. So this is obviously your inducement. You would have also been spotted. So there is inducement. You've already spotted the liquidity that the market is about to take, which is the whole of this place, right? After that pullback, you were waiting, but it didn't come. All right, now the market happened to have a very good bearish move to the downside. I'm like, oh, we've missed. There's always time. That's why you're alive. Just be patient. There's no need to rush. Be patient. And the market dipped to this side, causing the new break of structure. It has taken that swing low or the current low at that point in time, taking it and made this good pullback. Now, where is the next? It has happened again. Where is the next liquidity you are looking at? Look at this trend line. Market got to this place. Okay, but tapped here again, forming this pattern, tapped here again. I'm like, oh, there's a good trend line this here. Retail traders obviously want to keep taking those trend line to go to the other side. As a smart money concept trader, what's in your mind? Our directional barriers first of all on 4 hours time frame is bearish, so you are looking for more bearish moves and not to buy at this point in time. However, you can trade pullbacks if you are good at that, but still be on the safe side. Now, the markets, this was the last. You keep reading the structure. This was the last break of structure, which means if this swing low, the internal break of structure is taken out to cause a change of character, you'll now be looking for opportunities to sell. So the market got to that place and took it. Now, what did I do? What did I do? Let me zoom in here. So I was now reading. After waiting patiently for that change of structure to happen, since I know where the liquidity and where the market is going to, I was now reading where the market, the internal structures of the market. All right, break of structure to the downside, break of structure to the downside, break of structure to the downside. What was forming before it made the real change of character on the 4 hours time frame. All right, if you go to 15 minutes, you'll see this clearly. All right, so change of character to the upside, change of character to the downside. Now, then it made that external words change of character. Now, so in order for me not to miss out, since I've already started reading the internal structure, I said let's play along with what we have on the internal structure already. So let's go to the 15-minute time frame. Okay. Sorry, where is my chart? Where are you? 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 Here I come. So this was the last change of structure to the downside, and so what are we anticipating? Again and again, come to the 15, still the same thing. Still the same thing. All right, the market's change structure. Where is the inducement? After this impulse move here, this lead to pullback was the inducement I set at that point in time. And guess what, guys? When the market took the inducement, now look at this internal liquidity, the small liquidity on this thing. So I was already anticipating, yeah, this really liquidity. And if you look clearly, I set a change structure, which is the last swing low, internal swing low there, right? Okay, this was the break of structure, and I just wanted the market to take it. When it took it, then I set my order here, and it happened that the market didn't come there on time. And it did this. Game swept me out, took the other block that was above there and went clean. When I mean clean, to our direction. Now I asked myself, what just happened? What just happened? Oh my God, how did this happen? And I spot that there was equal lows here. There was also a liquidity here. As you can see, this guy. So the market took my money. Took other people's money who would have fallen into that trap as well. After it did that, it went to the direction perfectly well again. All right, so keep breaking it down. I kept reading the chart, You can see after every impulse move, I have my liquidity here, hoping and waiting for the market to come to that place to take me, but nope, it didn't. The same thing here, hoping and waiting, nope, it didn't. Now this was the next break of structure to the other, to the downside, hoping and waiting. Oh my God, the market just keep running away from me. I'm like, did I offend you? So we kept moving onto this place, and someone will be like, how did he take and trade this pullback? Not really difficult, but always try, if you are, especially when you are new to the market, always try to flow with the direction of the market. Pullbacks are not that easy to trade. So how I spot the pullback, which is not really of our concern now. The market has actually swept, I will call sweep, let me zoom this in for you, swept our last current low, the external one. It swept it in the sense that, what do I mean that it swept it? There is no full body candle close to the downside, just wicks, a lot of wicks. So I was like, okay, then there is a kind of pullback that wants to happen here. So what do we do now? I started reading the market again. Let's read the market again. Sorry, this is at this side. So that pullback, this was the last order block. Look at the impulse move here. Okay, look at this impulse move here. Look at this impulse move here. Now you spot your inducement here first of all. That's when the market was moving that time. You spot your inducement here. This should change them. Come on, change. Spot your inducement there. All right. So it happened that as at that time, the market got back to that where our inducement was supposed to be taken and caused an equal low, which is now a trap for liquidity. I get it. So a lot of traders who want to set their orders here, their buy order and whatever. And what happened? The market swept clean, took those orders, tapped into the order block. You can see it's good accumulation. Tap into the order block and move. Now, as the market is moving, what are you noticing? See on our equal lows, I spell it as liquidity, which is still good. It's creating trends. All right. The anticipation is this. It's creating liquidity. Sorry. So then, and remember, the directional bias of the market is what? Bearish. Want to sell, right? So on the 15 minutes coming to this place now. So the market trying to find so the market now, we've gotten to a place where there is an order, right? Where there is an order block. If you check from first, this order block, this accumulation here, and market made this change of what? Character. This change of character coming to take all this liquidity here. Now, what will be in your mind is, where is the first where is that mini pullback after this impulse move? You can see this impulse move here. This is it, which will mark as inducement. So I think this is 1.8 premium level. I wanted to call from the 15 minutes. Yes, so we have the 61.8% premium level pullback to where that order block is. All right, so where this order block is that I set here. It happened that the market came to the inducement but never got to take the entry. Ouch. Patience, we actually speak, but maybe the next one or any other one we can spot will likely work out for us. So that's it. Now, just tell me, where is the next liquidity you are looking at from this internal structure? You can see this trend line here. Are you getting it? Which the market has actually even taken. Materially have taken that liquidity. And this zone now should be protected. This should now be current high we can now work with. I get in. So though I'm not seeing much accumulation, maybe just the whole of this, which is too big for me to take. All right, but patiently wait to see the reactions of the market. Though this trade has, to me, it has been missed. But there's no need chasing anything. Just be patient. There's no need chasing anything. That has gone. That's just that for liquidity and inducement, as simple as it is. So don't forget the liquidity, how to spot it. You have your equal highs, equal lows, swing high, swing low. I didn't mention that since. Now from 4 hours, obviously you should have known that this was the previous swing low, right? The market is coming there to take it as it's an bearish run. Same thing here. Okay, this is a change of character before it starts all those things. Now this is now the current swing low, which the market has already come and actually swept, make it pull back. We will still try to come and break it completely before we have a complete break of structure for the external structure. That's on the 4 hours we're using now. That's that for liquidity and inducement. Very simple. Just take your time, back test, try it, spot out where there are trend lines, their direction, spot out where there are equal lows, equal highs. Read the structure, do your top analysis, read the structure. Don't put too much meaning to everything. Don't choke yourself. Just make everything simple and clear for yourself. Take your time, make everything simple and clear. All right. So please do well to watch other videos in case you're confused on market structures. We already have our video. Bullish, bearish, also the range structure, also zones, how we spot out our order block. We have the videos there. And please share, like, and subscribe. Bless you guys.